What if I told you the interest rate that helps you save is the same one that helps banks profit? From you. Sounds contradictory? That's because it is. Interest rates aren't just a financial tool. They're a transfer of power. If that makes you pause, hit like and subscribe, because this one reveals what your bank would rather you never figure out. Let's break it down. Interest rates are supposed to reward savers and charge borrowers. That's the story we're told. You deposit money into a savings account and the bank pays you interest. Meanwhile, someone else borrows from the bank and pays higher interest on a loan. Seems fair, right? Here's the problem. The numbers are rigged. Banks might pay you 1% interest on your savings, then lend that same money out at 8%, 12%, or even 24% for credit cards. That's not a reward system. That's arbitrage. And the kicker? The gap, the spread, is where the bank makes its real money. Your savings are their business model. Let's look closer. Ever noticed how savings rates barely move, even when the Fed hikes rates aggressively? That's not an accident. Banks are slow to pass on those higher rates to savers, but lightning fast to apply them to your debt. In 2022, the Federal Reserve raised rates multiple times to fight inflation. Credit card interest shot past 20%, but most savings accounts still offered less than 1.5%. So while your debt got more expensive, your savings barely grew. Now let's make it more real. Imagine you have $10,000 in a savings account earning 1%. That's $100 a year. But your credit card charges you 22% interest on a $10,000 balance. That's $2,200 a year from you to them. That's a $2,100 swing in the bank's favor. They're using your deposits to fund your debt, and they profit both ways. It gets even more interesting. When interest rates are low, banks borrow from the government at nearly 0%, then turn around and lend to you at 3%, 7%, or higher. It's like flipping a product with infinite supply and no production cost. So why don't they want you to know this? Because if you understood how rates really work, you might stop parking money in low-interest accounts. You might stop carrying high-interest debt. And you'd start playing the game instead of funding it. Now let's talk about emotional psychology. Interest rates also affect how we think. When rates are low, we feel encouraged to borrow, buy homes, finance cars, max out credit cards. But we rarely ask, what's the true cost over time? Take that $30,000 car loan at 6%. You think it's manageable, but over 5 years, you're paying $4,800 in interest, nearly $5,000, just for permission to buy something faster. Now multiply that logic across mortgages, student loans, credit cards, and it's not just numbers. It's a lifetime of invisible costs. Banks don't need you to fail. They just need you to keep paying. On time. Every month. Forever. So what does this mean for us? It means we need to stop seeing interest rates as a background detail. They're the engine of the financial system, and you're either fueling it or building with it. Here's the paradox. High interest rates can grow your money if you invest, but they drain your wealth if you owe. It's not about whether rates are high or low. It's about which side of the equation you're on. If you're a borrower, you're paying. If you're an investor, you're earning. And if you're just saving, you might be stuck in the middle, slowly losing ground to inflation. So the next time you hear, the Fed is raising rates, don't just think about your credit card. Think about your whole strategy. Because in this game, the rules are public, but the advantages are hidden. Have you ever looked at your account and wondered why your savings barely grow, but your debt multiplies? So, here's the big question. Are interest rates working for you or against you? Let me know in the comments. What's one interest rate that shocked you recently? Was it your savings return, a loan, a sneaky charge? And if this video opened your eyes to how the system works, share it with someone who thinks earning 1% on savings is better than nothing. Because knowledge doesn't just protect you, it empowers you. Wisdom doesn't come from degrees. It comes from small daily decisions.